Good afternoon, everyone, and welcome to our educational webinar, Cryptocurrency Unveiled, Tools for Attorneys to Trace and Investigate Digital Assets. My name is Drake Politz, and I'm an associate here at KLG and your moderator for today's session. Today's webinar will last approximately 1 hour. We will begin with a presentation by our speakers, followed by a Q&A session. If you have any questions during the presentation, please type them into the Q&A box, and we will discuss them at the end. Before we get started, I'd like to go over our disclaimer and introduce our speakers. Disclaimer: this presentation is not intended to provide legal, investment, accounting, valuation, or tax advice and should not be construed as such. The information contained herein does not represent the opinions of KLG Business Valuators and Forensic Accountants LLC, as it may relate to specific matters and should not be construed as such. Any examples contained herein are presented for illustrative purposes only. The materials contained herein may not be distributed without the express consent of KLG Business Valuators and Forensic Accountants LLC. Now I am pleased to introduce our speakers. First, we have David Gralnick, a seasoned forensic accountant with over 25 years of experience in business valuation and litigation support. He has a diversified background in litigation, consulting, accounting, and auditing, as well as an extensive tax background. Joining him is Panariello. Mr. Panariello has over 12 years of experience in forensic accounting and business valuation. Mr. Panariello's engagements have involved matrimonial matters, estate and gift tax planning, shareholder disputes, the acquisition and sale of businesses, corporate planning, complex separate property analyses, and financial asset tracings. Without further ado, let's dive into today's topic. Lou and David, the floor is now yours.
Thank you, and thank you for everybody joining us. For those of you who saw me yesterday on TV, this is not the same shirt, just so you know. This is my blue KLG shirt, not my black KLG shirt. And with that, let's get going. So what is cryptocurrency? Cryptocurrency is a decentralized digital money that's based on blockchain technology. Now that sounds all good and all, but I don't think anybody really understands what that means. So let's break it down a little. What does decentralized mean? It's decentralized because it's peer-to-peer. It's directly from one user to another. There's no bank in the middle. This is what has helped the technology gain some traction. The ability to send money from one person to another without having to clear it through a bank or some other centralized government. Now, it's important to understand that although cryptocurrency can be bought and sold like a stock in a public company, it is not a stock because it's not backed by the results of a company. If Apple has good news on a quarterly earnings call, its stock will most likely benefit from it. Cryptocurrency just trades on supply and demand, reputation, and popularity. There's also an anonymity to cryptocurrency. Unlike a bank account your social security number is tied to, there's not even a name that ties to an individual. It's just a wallet holding a cryptocurrency. And that wallet is a bunch of numbers and letters, which makes it very difficult for people to break into that. So how did cryptocurrency come about? Well, it started with cryptography, which is the use of mathematical and computational methods to encode and decode data. Cryptography is used in cryptocurrency to secure transactions, control the creation of new coins, and verify ownership transfers. So the term crypto in cryptocurrency is in reference to the cryptography, which is, as I said, the use of the mathematical and computational methods to encode the data. That's how cryptocurrency was created. A process called mining, whereby a computer genius called a miner cracker or an alphanumerical code. And when they crack that code, a new token of that crypto is formed and added to the blockchain. The miner actually gets a fee for cracking that code. Moving on. So there are over 13,000 different types of cryptocurrencies in circulation. Currently, those 13,000 cryptocurrencies have a market cap of about $2.33 trillion, although that changes on a daily basis. Well, actually on a minute by minute basis sometimes. Bitcoin makes up more than 50% of the total of that market cap, as you can see on this chart. The top 10 make up about 85% of the total of the market cap. So many of the 13,000 cryptocurrencies that are in circulation are pretty much inactive or worthless. There are still, however, about 8 to 9,000 active cryptocurrencies in the market, many of which are traded at fractions of pennies. There's concentration in the top 10. We provide that list because these are the ones that are most known, the ones you'll see most often: Bitcoin, Ethereum. Bitcoin's the original cryptocurrency. There's a finite amount of Bitcoin in circulation, which makes it inherently more valuable. So as you can see, Bitcoin's market cap, which is obviously the value of the Bitcoin in circulation, is $1.264 trillion, which is more than half the market cap of all the cryptocurrencies on the market. Ethereum, who's second, is only 317 billion. It's gained popularity in recent years, especially since NFTs, or non-fungible tokens, and we'll need a whole nother webinar to talk about those. These are the only transactions that use Ethereum. Only Ethereum is using NFT. So if you have a client purchasing an NFT, they're not buying them in US dollars. They're buying them in crypto exchange using Ethereum. Okay, so moving on, we'll go through a little history of the cryptocurrencies. So in 1983, David Chaum, who's known as the godfather of cryptocurrency, published something called eCash. It was basically, a publication that he anonymously came up with an electronic money. In 2008, Bitcoin, a peer-to-peer electronic cash system, was published by an unknown person or persons going by the name of Satoshi Nakamoto. It's basically a white paper which lays out the structure for the blockchain in a comprehensive, detailed manner. It's only 11 or so pages long, so if you really want to read it, be our guest. It's kind of entertaining, but you just need to know what to look for, and we'll get into that shortly. So in 2009, Bitcoin was actually created, becoming the first truly decentralized cryptocurrency. In 2010, the first known purchase ever was made with Bitcoin. Believe it or not, a Florida man paid 10,000 Bitcoin for 2 pizzas from Papa John's. Had a value of about $40, which is about, in Bitcoin, if those Bitcoin were today, they'd be worth about $600 million. So you can see that there's a very large jump in what Bitcoin was worth. In 2013, Forbes recognized Bitcoin as the year's best investment. That's because it went up by a substantial amount in that year. I think it was like how much, Lou? How much was it? Like
It only had a
5,000
return
plus
of
percent?
5,000, only 5,189% in that year. Not too bad.
Not too bad, I would agree. So in 2014, Bloomberg proclaimed Bitcoin as the year's worst investment because its value declined by over 50%. In 2015, Ethereum was created. It was originally conceived in 2013 and it went live in 2015. So that's just a brief history of cryptocurrency for you guys. Moving on to the next slide. This slide shows the price of Bitcoin, the history of it basically pre-COVID. So prior to 2014, you can see it really didn't do anything. In 2014, it started to gain some traction and popularity with media coverage, which ramped up in 2017. 2018, you can see 2017, it really, really increased. 2018 was known as the Great Crypto Crash, or the Bitcoin crash. They declined mostly 80% from their highs. There were a few causes for this. Mainly some Asian countries like South Korea threatened to put bans on trading cryptocurrencies. There were some security breaches in some pretty major exchanges that led to hacking and people losing their cryptocurrency. Keep in mind, this isn't Chase Bank or Bank of America or anything else being hacked. It's not, there's no help desk you can kind of call. It's an exchange. So if it gets hacked, if your wallet gets hacked, your investment is gone. Goodbye. And that's why there's a lot of, secretivity to these quote unquote wallets. So there was a fear in the cryptocurrency market, and coupled that with the riskiness of the investment, crypto declined immensely in 2018. So moving on in 2019 and forward, you can see that in the last 7 years, the percentage of change of cryptocurrency was 1,621%. Just in the last 5 years, it went up 638%. The last 3 years, 40%, but in the last 2 years, 226+%. So as you can see, it's extremely volatile. It moves up and down very quickly. Sometimes you look, it's gone up and down $3,000, $5,000, $7,000 in one day. For the last 6 months of this year, it's actually down about 6%. So what causes cryptocurrency to kind of go up and down? Well, a lot of that is interest rates. So why is Bitcoin and cryptocurrencies gone up so much in the last 7 years? Well, you have declining interest rates. It's kind of like they're almost like tech stocks. They move in the same kind of thing. So you're looking right at the chart after the pandemic hit, the Fed lowers the interest rates to stimulate the economy, and Bitcoin shoots up within a year from 15,000 to 60,000. In 2021, in December, and start in 2022, we have double-digit inflation. The Fed, enters a tightening cycle, decreasing the liquidity in the market, increasing interest rates. So these high-risk investments don't perform well in those, like Bitcoin. So once we saw that a soft landing was possible, the Bitcoin started climbing to new heights, although it's gone down recently. So moving on to the next slide.
Yeah, and just before we move on,
Yep.
the reason that we're showing this to you guys is we're not encouraging investment into Bitcoin, but we want everyone to understand why it's become such a popular investment, and it's because over a number of years, it's just done really well in the market relative to other benchmarks like the S&P 500 and the Dow Jones and even the Nasdaq. So just keep that in mind. There's over 55 million users of cryptocurrency in the United States now. So it's a decent chunk of our population is starting to invest in this sort of alternative investment.
All right. So moving on. So, we just went through the gains and losses. Lou talked about, it's becoming much more prevalent in the US and in the world, really. Some investors, have a risk appetite, which includes cryptocurrency. For most of you who I'm sure you've seen Shark Tank, Evan O'Leary, Mr. Wonderful, said that cryptocurrency was 11% of his portfolio. So a lot of people who, are very well informed do utilize it. So what's the store of value? So the store of value is a commodity, an asset, or money which retains its value and doesn't depreciate. Gold is a good example. Some people actually refer to Bitcoin as digital gold. So who purchases, goods and services can be purchased with these, and companies that accept Bitcoin include Microsoft, Expedia, Subway, Home Depot, AT&T, Gucci, Starbucks, Whole Foods, even places like Burger King now, and Pizza Hut will take cryptocurrency as a form of currency. Time Magazine will take it. The Miami Dolphins, the Dallas Mavericks, people like Stephen Ross, who's, one of the more intelligent and well-respected investors in this world, is the owner of the Miami Dolphins. And he utilizes, the Miami Dolphins take it. And, Dallas Mavericks, Mark Cuban who is another well thought of investor in the world, by a lot of people. So the Dallas Mavericks, who he used to own, also take cryptocurrency and Bitcoin to pay to as in to utilize. So that's just an example of some major players that do. I know a lot of you know that I play poker, and it's very prevalent in the poker world as well, where these people, if somebody loans somebody money, they pay them back in crypto. So that's just another example of things you will and will not see.
And in case anyone's wondering, how in the world do you use a Bitcoin to actually go and buy something at Burger King or at Subway? There's actually, they call them crypto debit cards. So, we'll get into crypto wallets a little bit later, but you can actually load Bitcoin or Ethereum onto mostly Bitcoin onto a debit card and use that to make purchases. So, it's something that's out there and only a select few places accept it, but it's a growing number of places that accept it.
Okay, so cryptocurrency and taxes. So in 2020, the IRS started requiring taxpayers to check off the box. There's a digital asset box there. You can see to the right, right on page 1 of their personal tax return, disclosing if they either received or sold digital assets. So if you have received or sold them, you have to check off yes. If you haven't, then you can check off no. So the IRS has become pretty aware of cryptocurrency, and we now have to report all gains and losses from cryptocurrencies or uses of them. I guess if you're using them to purchase something, you still have to check that box. But gains and losses of cryptocurrency are now reported on a tax return, and we'll show you now where it is. So in 2014, the IRS issued notice 2014-21, 2014-16 IRB 938, explaining that virtual currency is treated as property for federal income taxes. So what's that mean? Basically that, it's going to be treated like a capital gain or a loss because it's property. So virtual currency is a digital representation of value. Other than a representation of the US dollar or foreign currency, that functions as a unit of account, a store of value, and a medium of exchange. Some virtual currencies are convertible, which means they have an equivalent value in real currency or act as some kind of substitute for real currency. The IRS uses the term virtual currency to describe various types of convertible virtual currency that are used as a medium of exchange, such as digital currency and cryptocurrency. So if you hold a cryptocurrency for short term, under a year, it's reported as a short-term gain, and a year or more, it's reported as a long-term gain. Just like a stock in any other investment, because cryptocurrency is basically treated as an investment or a property for purposes of taxes by the IRS. Okay, so here is just showing the Form 8949 sale of other dispositions of capital assets. This is where you'll see cryptocurrency. So for example, if you had Bitcoin that you sold, in A, you'd write Bitcoin. In B, the date you had it, the date sold, the amount, just like any other investment, basically. And then at the end, it's the net gain or loss, and that flows through to your personal, up top on page 1 under Schedule D assets of your personal return. And they're taxed just like any other investment at that point.
And just before we move on, so the information that gets reported on Form 8949, it's important to us, right? Because with cryptocurrency, as Dave said, there's a lot of anonymity, and a lot of times it's hard to track this stuff, right? But when you have a tax return, you have something that's very familiar and common to us, right? So if we look at this form, we can see the description of the property. So was Bitcoin sold? Was Ethereum sold? But even more important is the date acquired and the cost basis of of that particular Bitcoin or Ethereum or any cryptocurrency that was sold. And the reason it's important is because the date gives us a reference point. The date gives us an idea of when a certain person started transacting with cryptocurrency. At the end of the day, we have to start with bank statements in order to trace this stuff. And I think for all of us who are sort of getting more comfortable in the cryptocurrency world, that's a little unfamiliar. Tax returns and bank statements are familiar. So if you look to this statement and you have a date and an amount that it was purchased for, you can go back to a bank statement or bank statements for multiple accounts, and you can try and trace where it was funded from. And in doing that tracing, you could determine if the entirety of what was invested was just liquidated within what's presented on Form 8949, or if there may be something else out there. So this is sort of a high-level jump-off point that we use to get the ball rolling on our tracing analyses. Okay, so where do we buy cryptocurrency? So this is important because these are going to be a lot of key terms that you're going to look for when you're looking through bank statements to see when was the cryptocurrency first invested in, right? At the end of the day, all cryptocurrency purchases have to start with a transfer from a bank account into either an exchange or some brokerage. So in the early days of cryptocurrency, it was actually very difficult to buy Bitcoin. There was a very complicated process of setting up a wallet, which was completely anonymous. And like Dave said, if you lost your wallet number or you couldn't remember your password to log back in to get into your wallet, your investment was essentially gone. There was no help desk with a hotline that you could call up and retrieve all of that stuff. So early on, it was very, very risky, and that's why it didn't really gain traction until 2017. When Dave showed you that chart, that was almost like a hockey stick in 2017 going up. The reason being is that in 2016, there was a company called Coinbase that started to gain traction. So Coinbase is an exchange that caters to non-technical folks, right? It's very easy to set up an account there, and you can link it to a bank account. It's also a publicly traded company now, so they have all of the back end and support staff that you would expect from a large company like that. Coinbase is a little bit of a hybrid. It's a place that you can buy cryptocurrency and you can also transact it. You can buy and sell, and you can also store it there. So let's get into some concepts. So one place that you can buy cryptocurrency is an exchange. Think of the NASDAQ, think of the New York Stock Exchange, right? It's where the actual transactions are happening. So as I said before, Coinbase is probably the most popular one that's out there. Other popular ones that we added in here are Binance and Galaxy, Gemini, Crypto.com, Kraken, not the hockey team from Seattle. But we have these here very specifically for a reason. A bank statement from, say, Chase will actually say transfer to Coinbase, transfer to Binance, or transfer from Galaxy, right? So the data and the information and the paper trail for that either initial investment or retrieval of dollars after selling a cryptocurrency, it's going to be right on the bank statements, but you won't know to look for it unless you know what these terms are, right? So if you look up Galaxy, you might not know that it's a cryptocurrency exchange unless you're watching this webinar. So another place to buy cryptocurrency, there's certain brokerages that have platforms for it. Robinhood, Webull, and eToro are certainly the most popular ones. So these are synonymous to Merrill Lynch and Fidelity, right? So think about how all this works. You can open up a Merrill Lynch account or a Fidelity account, and you can put money in there. And then you want to go and buy Apple stock. Your Merrill Lynch account accesses NASDAQ, which is the exchange that Apple is purchased and sold on. You yourself aren't actually going to NASDAQ and doing it. Merrill Lynch or Fidelity is doing it for you. So that's essentially what Robinhood, Webull, and eToro, those types of brokerage platforms interface in order to do that. But keep in mind that in cryptocurrency, it's actually very common for an investor just to go directly to an exchange themselves, because if cryptocurrency isn't held within a Robinhood, a Webull, and eToro, it's held in a wallet. And that's the next slide that we'll get into in a second. The third place that you can buy cryptocurrency, they're actual crypto ATMs. There's not very many of them, but it's just important to know that they're out there. And I mentioned earlier that you can get a Bitcoin debit card. You can put that debit card into these ATMs, and you can actually buy and sell cryptocurrency, specifically Bitcoin, right from those ATMs. Now, again, all of that has to be linked to a bank account. So keep in mind that even though the transactions are happening at these ATMs, it will still be reflected somewhere in a bank account.
Right. And believe it or not, you can just Google crypto ATM New York, and it'll give you a list of places that have it. So it's easy enough to find if you want.
Right. And now starting in 2024, and this is just kind of some additional information, and it's not exactly anything that we're too concerned about when it comes to tracing cryptocurrency. It's that the SEC has now approved ETFs, which are basically, ETFs invest in an underlying security. So you invest in the ETF, and the ETF invests in that security. So the SEC in 2024 approved ETFs for both Bitcoin and for Ethereum. This is really for the investor who wants the exposure to sort of the ups and downs of cryptocurrency, but they don't want to take the risk of having to set up a wallet and having to go on to Coinbase or Binance and do the purchasing themselves. So they still go along for the ride, but in a more safe way. These ETFs can be found within a person's Merrill Lynch account, so or Fidelity account. So there's not too much concern with these. It's the same as if somebody had Amazon or Exxon stock inside of a brokerage account. Okay. So what is a wallet? And what is a wallet address? Because the wallet address is probably even more important than understanding the concept of a wallet. So at its highest level, a crypto wallet is exactly where cryptocurrency is stored and maintained. Crypto wallets also store the information that's necessary to buy and sell cryptocurrencies with that wallet on those exchanges that we were talking about. It essentially has your bank account information, but in the form of a wallet address. So it's not actually your bank account, it's a wallet address that goes and transacts with those exchanges. It's important to know that a wallet address is unique to each wallet. Bitcoin wallet addresses can be 26 to 35 characters long. Ethereum wallet addresses could be 42 characters long. And Ethereum wallet addresses typically start with a 0 and an X. And that's how you know that it is Ethereum versus Bitcoin. And that's important to know when we get into the blockchain in another slide, the distinction between a Bitcoin wallet address and an Ethereum wallet address. there's two main types of wallets that are out there, and then there's subcategories under each of the two main ones. But really, the two main types are either a hot wallet or a cold wallet. So a hot wallet is a wallet that is consistently connected to the web. So it could be a web wallet, which is you sign on to a website and you put in your credentials and you log in, and therein lies all of your cryptocurrencies. Another one is a desktop wallet. Think of this as sort of an application that gets installed onto your computer. And then instead of keeping your cryptocurrency in this web account, your cryptocurrency is stored right on your computer. However, our computers are always connected to the internet, conceivably, as long as you have Wi-Fi, and therefore it's considered a hot wallet. And the third kind, or third, of the popular hot wallets, the third kind is a mobile wallet, and that's pretty self-explanatory. Instead of keeping the wallet on your computer and your cryptocurrency on your computer, the mobile wallet is maintained on your cell phone, again, in an application or an app. A cold wallet, as we said, is not connected to the web. People do this for security purposes. In the earlier days of cryptocurrency, there was a lot of hacking. If someone got your wallet address or your private key, it was called, they would be able to go into your wallet and transfer all of your cryptocurrency into their own wallet and disappear forever. In order to sort of mitigate that, hardware wallets were created. So you can kind of see on the screen over on the right, it looks like a flash drive. And that's essentially what it is. So when that flash drive is not connected to the computer, nobody can access it. It's completely off of the web. And then the last kind, which isn't as popular anymore, but was more popular in the beginning, is a paper wallet, which essentially prints out a QR code. And anytime you wanted to buy or sell cryptocurrency, you would have to scan this QR code, and it would access the blockchain and it would recognize what you owned in your wallet. But like I said, that's not so popular anymore. Hardware wallets are probably the most common that you would find. And that is, part of, the tracing, and what we do is finding out the wallet numbers, which we use the blockchain in order to do so. Okay, so we'll talk about the blockchain, and I'll try to synonymize this into something that's a little bit more relatable. So with any transaction that happens in the cryptocurrency world, there's two wallet numbers that are required. And this way, the blockchain knows where is the money, or where is the cryptocurrency. We'll use Bitcoin in this example. Where is the Bitcoin coming from? And where is the Bitcoin going to? So that would constitute a transaction. A group of transactions are called a block. Blocks are used for verification purposes. So in the cryptocurrency world, there's numerous computers and databases that are always verifying these transactions between different wallets. And for that technology, it's a lot easier to facilitate if all the transactions are blocked together. So that's all you really need to know about blocks. It's more important to know that you could be looking at one transaction, and we're going to get into some of the online resources. You could be looking at a transaction and click the block number, and then you'll see dozens of transactions that actually have nothing to do with the tracing that you're working on. So if you look at this sort of illustrative example on the right side, there are 3 transactions in each block. Maybe the first transaction is relevant to the tracing that you're doing, and the other 2 transactions have nothing to do with your tracing. So it's just important to know you want to work on a transaction level and really ignore the block level, which is very easy to do, and we'll get into. A combination of blocks is called a blockchain. And that's exactly how the blockchain is named. Think of this structure as a book. So every transaction is a line, and a bunch of lines forms a page. A page is a block, and a bunch of pages forms a book. And the book is what we would call the blockchain. Every single transaction that is in the blockchain has a timestamp, which is very useful when you're doing your tracings and you're starting with a bank account and working your way all the way through, to analyzing the blockchain. Is that everything has a date stamp. Also, what's really, really important is that once data goes into the blockchain, it can't be altered and it can't be deleted. So we find that the data that comes out of the blockchain is very reliable. And the last thing that's important to know is that there are different blockchains for different types of cryptocurrency. So Bitcoin is a blockchain. Bitcoin is also a cryptocurrency. So Bitcoin is transacted on the Bitcoin blockchain. Now you have Ethereum. Ethereum is also a blockchain. Even though everybody refers to it as Ethereum that's being transacted, it's actually a cryptocurrency. It's called Ether. So Ether is transacted on the Ethereum blockchain. So when you're analyzing the blockchain, think of it as different books. So you might be looking at one bookshelf, but if you're looking at a person who has Bitcoin, you're looking into one book, and you're looking at all the transactions relating to the Bitcoin on one blockchain. And then if they have Ethereum, that's its own blockchain, and you have to look into that book. And that's important because there's different websites that we use for different blockchains. So if we have a client who is buying and selling Bitcoin, there are certain websites that are specific to the Bitcoin blockchain. We wouldn't be able to analyze transactions of Ethereum on that website, and vice versa. If they're transacting Ethereum, we wouldn't be able to see those transactions on a Bitcoin website. So just keep that in mind as we go through. All right. Documents that we typically request when we're doing tracings of cryptocurrency. The first one is personal bank statements. And we typically ask them for as far back as is necessary. And that kind of works in tandem with number two, the personal tax returns. So at the onset of any cryptocurrency tracing, there's a lot of information gathering. And a lot of times you can gather that information by looking at personal bank statements, looking for transfers that are going to Coinbase, that are going to Binance. You can look at the personal tax returns like David showed us earlier. You can look at Schedule D and see if there's been any transactions of cryptocurrencies and when the acquisition date of those were, to use as a jump off point for reviewing bank statements. That also, number 6, although it's at the end here, that is right in that same train of thought. And this is for the matrimonial attorneys that are watching. If you're in New York, you have a statement of net worth. If you're in Connecticut, you're using a financial affidavit. And those are disclosures that are sworn to. So to the extent that a person owns cryptocurrency and it's maintained in a wallet, that information should be disclosed on the net worth statement and the financial affidavit. In addition to those, because not everybody reports their cryptocurrency activity on their tax returns or on their statement of net worth or financial affidavit, we bluntly request a list of all of the wallet numbers for every wallet that's being utilized. Having a wallet number is a very powerful tool, and we'll get into that in a little bit as to why it's so powerful. In addition, it's also very beneficial to get transaction reports from the exchanges, so Coinbase and Binance, because that'll show us all of the activity that happened in Coinbase, all of the purchases of Bitcoin, sales of Bitcoin, sending Bitcoin to another wallet. That's always key, or converting Bitcoin into another cryptocurrency. Transaction reports are a lot like a bank statement. Not every transaction report has a running total, though. So you could look at a transaction report like we're going to in a second for Coinbase, and you can see the purchases of Bitcoin. You can see the sales of Bitcoin. You can see the transfers of Bitcoin. But what you don't see is a running total. So what we ask for a lot of times is right from the Coinbase website, right from that interface online, we ask for a screenshot that shows what the current balance is of Bitcoin and Ethereum or Solana or Dogecoin, any of those popular cryptocurrencies that are out there, a screenshot to show what the current balances are, because we can use the detail to sort of create a spreadsheet and tie into the balances. So with that said, okay, so the next few slides are going to be actual screenshots that are from Coinbase and then a few websites. Now, in order to protect the innocent and to,
Or not so innocent. You never know.
or not so innocent, in order to not divulge in order to not divulge any personal information, because anybody could take these wallet numbers and pop them into, sort of the cryptocurrency explorers that we're going to get into. I've whited out anything that is sensitive information, but we've left important stuff. So, all right, this is a screenshot from Coinbase. So what is this showing us? So first and foremost, at the top left here, and let me get my laser pointer out. Okay. So at the top left here, it says transaction report for, there was a person's name here that we whited out, but just, so that we know whose account this is, that's, important to look at first. We also look at the date range. Now, we always ask for a transaction report that goes as far back as is necessary. Now, if you look here, the first transaction on this particular Coinbase account was in 2014, but the search started in 2012. So it's better to use a broader search or it's better to request a broader search range than is actually suspected. So if you look at the personal tax returns and you look at Schedule D, and there was some cryptocurrency acquired in December of 2018, don't ask for the date range starting in December of 2018. Go before that. Make sure that you're picking up everything. So that would be my advice. That would be my advice there. Couple of other key parts of the statement are, first off, the transaction type. So here, Bitcoin was purchased, BTC, think of that as a ticker. So Apple's is AAPL and Amazon is AMZN. Exxon is XOM. Bitcoin is BTC. Ethereum is ETH. You become very familiar with these as you go through enough of these tracings. So here, 4.3 Bitcoin were purchased on February 18, and I can actually blow this up. I think that's probably more useful. Okay, so 4.3 Bitcoin at a price of only $675 per Bitcoin, for a total of $2,905. When including fees, it was actually $2,934. that was purchased on this date. So if we go back to a bank statement, we should see a transfer from a bank statement into Coinbase for about 2,900 bucks, because that's the only way that it would have been purchased. Then apparently this person didn't do anything for 7 years. So 7 years later, Bitcoin is trading at $47,000 per Bitcoin. And this person converted Bitcoin into Ethereum. So as you can see here, they took 0.42 Bitcoin and turned it into 10.9 Ethereum. So now if we're doing our tracings, as I said before, Bitcoin and Ethereum have different blockchains. They're different books per se. So when we're going to analyze the transactions, we have to make sure we're looking in the right book, which we'll get into in a little bit. And then,
sorry, just to interrupt. This comes directly from Coinbase, right? It's not a KLG generated statement.
this is not generated by KLG. This is right off of a statement for Coinbase.
And this Coinbase statement goes back to the blockchain, right?
So all of this activity is also included on the blockchain. So the next slide actually shows, okay, so now what do you do when you see something like this? So this isn't a purchase, this isn't a sale. This is 44 Ethereum at 4,400 bucks for each one. So lots and lots of money. So it says here, sent to, and then a long wallet address. And I blocked out the middle of the number so that no one can go and look at this. So this says sent and not sold, right? If Ethereum were sold, we would look to a bank statement to see if the monies were deposited. So doing some quick math on 44 Ethereum times 4,500 each one. So this is about $198,000 worth of Ethereum that was sent to another wallet. And how do we know it was sent to another wallet? Because it says sent and it gives us a wallet number. Okay, so now we have a wallet number that we can investigate for the next layer and understand what's going on here. Why is Ethereum being sent out? So the statements are useful, but in and of themselves, they're limited in the data that they provide. So the next slide, here's an example of how we would input the data into Microsoft Excel. So remember I said that the statements for Coinbase, they don't actually have a running total. So we create the running total. So back in 2014, Bitcoin was purchased for, if you look over to the right, for 2,900 bucks. And we keep this column, this buy sell column, because we know that anytime something is purchased and something is sold, we can look to a bank statement to make sure that we're tracing the cash part, the US dollar part of the transaction through and through. So then we had the conversions, as we talked about, where Bitcoin was converted into Ethereum. So as you can see here, we have Bitcoin declining and we have Ethereum increasing. And then we have Ethereum being sent to this mystery wallet. Again, I just put some dots there to protect the innocent. But this was 44 Bitcoin. Now we have a wallet address. And now we know that after that transaction, there should be, Ethereum. There should be 14 and a half Ethereum left in this wallet. Now, this wasn't on the statement, but I added it in as an illustrative example. What if the rest of that 14 and a half Ethereum were sold? So what we would see on the Coinbase statement is the date it was sold, the price that it was sold for. So I went in and saw that on March 15, 2022, Ethereum was trading for about 2,600 bucks, which is $38,000. So that 14 and a half Ethereum, that sale would result in $38,000. We would go to the bank statements that we know of. We look at the net worth statement. There's bank statements that are disclosed or financial affidavit. there's bank statements that are disclosed there, and we would make sure that these funds were sent to a bank account that is within the confines of the marital estate if it's a case for divorce purposes. So that's how we use the Coinbase account as sort of a jump off point to get rolling, because as I said, money has to go from a bank account, a Chase account, a Bank of America account has to go into an account like this for Coinbase. Okay. So what do you do about this transaction here, that it was sent to another wallet? So let's talk about blockchain explorers. So when you're dealing with Coinbase and Binance, you get those nice transaction reports that have all the data and all the activity. But if someone's just doing transactions in and out of their wallet, that is not on Coinbase and not on Binance, it's just that little hard drive that I showed you before, or it's a web-based wallet, what do you do about that? So that's when we go to blockchain explorers. So a few key terms is the wallet address, which we talked about before. It's synonymous to a bank account number. Inflow and outflow, I think those are pretty self-explanatory. And inflow means that that particular wallet received something, whether it's a Bitcoin or an Ethereum or something else. And outflow is the exact opposite. That wallet sent out a Bitcoin, sent out an Ethereum. Another important term is a hash. So you'll see that when I show you a screenshot in a little bit. So a hash is basically unique to each transaction. So instead of searching for a wallet, if you're keeping track of the hashes, and you see a very large transaction and you want to be able to get back to that specific transaction very easily, you can search by the hash instead of the wallet number. So that's just another tool to get around easily, and I'll show you that in a second. And the last thing you'll see a lot when you're going through all these blockchain explorer websites is gas. Gas is essentially the fees associated with each transaction. A huge criticism of cryptocurrency is the amount of energy that goes into each of these transactions. It's very, very energy intensive. So these databases have to charge for, they call it gas, but they're essentially fees in order to facilitate all these transactions. Okay, so we went through most of this. I put some examples here, and I think there was a question about circulating, our slides here. So yes, they will absolutely be available with everything contained herein, which has all the screenshots that you've been looking at. So here's my three favorite of all the blockchain explorers. One's called blockchain.com. Another, and this is blockchain.com is very good for Bitcoin transactions. Etherscan.io, that's obviously good for Ethereum. And BigQuery is good for all of it. And although it might not be the best for seeing transactional data, it's very good for seeing high level where cryptocurrency is being transferred to or transferred from. And I have some screenshots of that in a moment. Okay, so here's a screenshot of Etherscan. So you put etherscan.io exactly as it was here at number 2. You put that into your web browser and up pops this website. So what do you do with this website? So as you can see here in the search bar, you can search by a few different metrics. You can search by address. You can search by that hash that I was just talking about. And then there's some others like block and token and domain name, which you shouldn't concern yourself too much with, especially if you have the address. So before we saw on our Bitcoin or on our Coinbase, we saw a wallet address that Ethereum was sent to. So what do we want to do? We want to know what is in that address. So we can take that address and we could pop it right into this search bar. And then you hit the search. And what you get next is a transaction report. So what's going on here? So there's a lot of numbers on the page here. So what important to note is the from and the to. Okay. The from is where it's coming from, and the to is where it's going to. So for the from, you have in this case, you have this is the wallet, right? An outflow to Galaxy. Remember, I mentioned Galaxy earlier is actually an exchange. So you can take Ethereum, send it to Galaxy, and then it's sold on Galaxy, and then you see a deposit to a bank. So we see on May 12th, 2022, 478 Ethereum were sent to Galaxy. So you can use these transactions in order to sort of tell the story of this particular wallet. Now, this is very difficult to see and understand. If you look over here, just trying to get my laser pointer up, there's this download page data button. So if you click that, you're going to get an export into Microsoft Excel of all of the transactions that are in this wallet. So what do you do with that information? Well, I could show you what we do. So we turn all of that data that is on the website into a spreadsheet. I changed the names of the wallet, so you can try to search these and you'll come up with nothing. But what I wanted you guys to see is how we track this, right? Again, there's no balances that are tracked. If you look at this back and forth, this from to amount, there's no balance column like you would traditionally see in a bank account. So again, we create that. So as we can see, this particular wallet has nothing to start, ramps up with a bunch of deposits. Through interviews and understanding, we came to learn that in this particular case, all of these inflows were income from this person's business. Okay. What we also saw were, like I said, those transactions out. So well, these are different dates, so forget that.
Lou, we only have a few minutes left, so.
Yep, we're motoring through. What's important to note is that in doing our research, we discovered another wallet number. So we call this wallet number 2. So we have this wallet we call wallet number 1. So now we take this wallet number here in the 2, 3,060 Ethereum were sent there, and now we put that into Etherscan. And we get an output from there. And here we see the 3,060 Ethereum coming in from that same wallet number. So now we know where it was sent. And we also know that using these, it looks like Hawk 55 to me. Hawk 55. So not only was business income being sent to wallet number 1 here, but it was also sent to wallet number 2. Okay, so now we uncovered a second wallet that information was being sent to. Or not information, but Ethereum was being sent to, and this helped us uncover possibly an asset that wasn't disclosed before. Okay. And I just wanted to show real quick this website that's called BitQuery. So again, you have your search bar and you put in your address. Okay, so now it knows which wallet to bring up. Okay, so this is the output from searching in BitQuery. So it has a lot of useful information. This one actually does show you the balance as of that day. So this one has very little Ethereum left in it. This shows you the first time that this wallet was used, shows you the last time that this wallet was used. It shows you how much Ethereum this wallet received. It shows you how much Ethereum, this wallet sent out here at the top. There's also other buttons, if you see at the top here, for inflows, outflows, and money flow. So inflows look very similar to what we just looked at on Etherscan. There's a timestamp, there's a wallet that it was a wallet number that it was sent from, and there's an amount. So it's very useful information. We have all the wallet numbers that this particular one was receiving from. Next is outflow. Again, useful. What wallet numbers is Ethereum being sent to? You have to question these wallets and you have to understand what they are if they haven't been disclosed yet. That's a duplicate slide. And the last slide that we saw, so that was called money flow. If you look at the top here, right along the middle of the page, there's address, NFTs on address, transactions. Then you see money flow. So if you click on money flow, it's going to give you this diagram. So this is called a sand key. And a sand key is basically just a data visualization technique. And it's a flow diagram. And it emphasizes the flow and the movement and the change from one place to another. So when you're looking at this sand key, the middle here in this gray bar and this blue box, this is the wallet that we're looking at right now. So you can see it has a wallet number. If you hover over it, it gives you the full wallet number. Obviously, we're not doing that. Then you see these arrows that are coming to the wallet and going away from the wallet. So this is basically giving us a summary of which wallets this particular wallet received Ethereum from. So it received Ethereum from 1, 2, 3 different wallets, and it sent them out to 1, 2, 3 other wallets. We use this data and we compile it, and this is good for crafting deposition questions, for us meeting questions to understand what does this wallet number over here on the right, what are these? And why are you sending Ethereum there? And that's the next step of our tracing, is to understand that. The thicker the band, the more of that cryptocurrency that was sent out. So this wallet on the top with the bluish pinkish band received a lot more Ethereum than the one below it. So it's a visual representation of the life of this wallet, and it's very, very useful in terms of following the money, so to say. So with that being said,
So there were a couple of questions, Lou, that I'm going to answer now. Someone
Okay.
asked if the conversion from Bitcoin to Ethereum is a taxable event. Yes, it is. Needs to be reported. And someone asked, can a person put cash into cryptocurrency without a bank account? If so, how? Other than the use of a crypto ATM, I do not believe there is any other way to do it. You would have to find a crypto ATM, have physical cash, put it into the ATM, and then I believe you can buy or get cash back from your a sale of it. But it would still, all that information would still be on a blockchain somewhere. Okay. So with that, those were we will give out all, as we said, we'll give out all the screenshots and our sheets. So with that, we thank you for joining us. Hope everybody found it helpful. If you have any questions, feel free to call either Lou or myself, or if you have any tracings or anything that you feel you need us for, we're more than glad to help out. Thank you very much for attending. Bye.